The entire used car market is on fire right now, but not in the way you think. What was once a goldmine for dealerships like CarMax has suddenly turned into a nightmare. Cars that were selling for $40,000 just a year ago are now barely moving off the lot at $15,000. And even then, buyers are hesitant. This isn't just a price drop. This is a collapse, and it's catching everyone, from Wall Street investors to everyday car owners, completely off guard. For years, CarMax was the king of the used car world. It built its empire on trust, transparency, and sky-high demand for vehicles when new car supply was tight. During the pandemic, when automakers couldn't build enough cars, CarMax and other used car giants cashed in big time. People were paying outrageous prices for pre-owned vehicles, often above their original sticker price. But that era is officially dead, and what's happening right now is shaking the entire auto industry to its core. Let's talk numbers, because they tell a brutal story. In 2021, CarMax was selling cars with record profits per unit, sometimes over $2,300 per vehicle. Fast forward to 2025, and those profits have evaporated. Cars are piling up on lots, financing is drying up, and consumer confidence has fallen off a cliff. With interest rates still high, fewer people are qualifying for auto loans. That means CarMax is stuck sitting on billions of dollars worth of depreciating inventory. Cars they overpaid for during the boom, and now can't unload without massive losses. And here's the kicker. This isn't just a market correction. This is a full-blown reckoning. The used car bubble has burst, and CarMax is feeling the impact harder than almost anyone. The company's entire business model depends on high turnover and quick inventory movement. But with sales slowing and prices free-falling, the pressure is suffocating. Vehicles that were once hot sellers, like the Toyota RAV4, Ford F-150, and Honda Accord, are now sitting on the lot for months. CarMax is slashing prices so aggressively that even private sellers can't keep up. Investors are panicking too. CarMax's stock has plummeted, wiping out billions in market value. Analysts are warning that this could be the start of a long, painful decline, not just for CarMax, but for the entire used vehicle industry. Because when America's largest used car retailer can't move inventory, that sends a message. The bubble has popped, and no one is safe. What makes this even more alarming is how fast everything flipped. Just a year ago, buyers were fighting for any car they could find. Now, CarMax lots are filled to the brim, and sales teams are practically begging customers to make offers. It's gotten so bad that some dealerships are turning to wholesale auctions, taking huge losses just to clear space for new arrivals. Vehicles are being written down by thousands of dollars, and yet buyers are still holding back, waiting for prices to crash even further. CarMax executives are scrambling behind the scenes. They've started tightening costs, cutting staff, and freezing expansion plans. The company that once boasted unstoppable growth is now desperately trying to survive one of the worst market reversals in automotive history. Their strategy of buying used cars at top dollar when demand was sky-high has completely backfired. Every car they overpaid for is now a liability sitting in the sun, losing value by the day. And the ripple effects are enormous. Smaller used car dealerships are collapsing under the same pressure. Banks are tightening lending standards, making it even harder for average Americans to get approved for car loans. Meanwhile, consumers who bought during the peak are watching the value of their vehicles nosedive, leaving them upside down on their loans, owing far more than their cars are worth. It's déjà vu from the housing crash of 2008, only this time it's happening in driveways across America. But this crisis runs deeper than just prices or profits. It's exposing the fragility of the entire auto market, how dependent it's become on cheap credit, inflated demand, and speculative buying. For years, CarMax and other dealers thrived because consumers had easy access to loans and stimulus cash. Now that the easy money is gone, the reality is setting in. People simply can't afford these cars anymore, and the market is imploding under its own weight. And as shocking as this collapse is, it's only the beginning. CarMax's struggles could trigger a domino effect that could send shockwaves through the entire automotive ecosystem. Think about it. When CarMax starts drowning in unsold inventory, it doesn't just hurt their bottom line. It affects the manufacturers, the lenders, the insurance companies, and even the private sellers trying to unload their own vehicles. Every single part of the chain starts to feel the pressure. dealers slash prices to move cars. Banks tighten credit even further. And the more prices fall, the more people panic. It's a vicious cycle that no one seems able to stop. In fact, insiders are now warning that we're entering what they call the inventory trap. CarMax and other big retailers are sitting on hundreds of thousands of vehicles that are rapidly depreciating, yet they can't just dump them all at once without crashing the market even harder. So, they're stuck, forced to balance between cutting prices enough to attract buyers, but not so much that they trigger an even deeper collapse. But consumers aren't stupid. They see the headlines, they watch prices plummet, and they're waiting on the sidelines for even better deals. It's become a psychological standoff, and CarMax is losing it. The brand that used to represent trust and stability is now associated with overpricing and desperation. Social media is flooded with videos of customers calling out CarMax for slashing prices on cars they bought just months earlier. Some buyers are demanding refunds, others are warning people to stay away entirely. The public sentiment has turned, and in an era where perception spreads faster than fact, that's a disaster for any retail giant. Meanwhile, Wall Street is starting to whisper something no one wanted to admit. CarMax might be the next major retail casualty. Analysts are drawing eerie parallels between what's happening now and the retail meltdowns of companies like Blockbuster or Sears, once unbeatable giants that failed to adapt when the market shifted. And make no mistake, the market has shifted. Consumers are prioritizing affordability over brand, practicality over prestige. The days of paying insane markups for a used crossover are gone, and they're not coming back. And the dominoes are already starting to fall. Banks and lenders that financed CarMax's massive inventory purchases are getting nervous. They're tightening their lending standards, demanding faster repayments, and slashing credit lines. That means CarMax now has fewer resources to keep restocking or refinancing older inventory. The liquidity that once kept the company stable is drying up, fast. It's the same pattern we saw before every major retail crash in history. Inventory goes up, sales go down, credit gets cut, and the spiral accelerates. But what's truly shocking is that this wasn't supposed to happen. CarMax built its reputation on being smarter than the average dealership, using data analytics, predictive pricing, and consumer behavior tracking to stay ahead of the curve. Yet even with all that technology, they couldn't see this storm coming. Their algorithms were built for steady markets, not for a sudden collapse driven by inflation, interest rates, and shifting consumer psychology. Now, those same systems that once gave them an edge are turning into a trap, because they're still valuing cars higher than what the market is actually willing to pay. And that's creating chaos behind the scenes. Dealers are arguing with corporate overprice adjustments. Sales managers are being pressured to meet impossible targets. Some CarMax locations are offering incentives so desperate that employees are calling it the fire sale era. There are even reports of lots being filled with vehicles that can't be sold at all, repossessed EVs, outdated hybrids, and luxury sedans that nobody wants anymore because of the high maintenance and insurance costs. Meanwhile, the average American consumer is starting to wake up to a new reality. The car market bubble was one of the biggest financial traps of the decade. During the boom, millions of buyers financed overpriced vehicles under the illusion that values would hold. Now, they're watching those same cars lose half their value in less than 2 years. It's a financial gut punch that's leaving families underwater on loans and unable to trade in without taking massive losses. This isn't just about people losing money on cars. It's about trust being shattered. For years, CarMax branded itself as the safe, honest alternative to shady dealerships. But now, even loyal customers are questioning everything. They're asking, if CarMax with all its resources can't manage this market, who can? The used car space that once felt reliable now feels unstable and unpredictable. And that's having a psychological impact on the entire economy. Cars aren't just vehicles. They're the second largest purchase most Americans ever make. When people lose confidence in that market, they start pulling back on spending everywhere else too. That means less consumer activity, weaker retail sales, and more pressure on the broader economy. It's a ripple effect that could extend far beyond the dealership lots and into the financial markets. Experts are already calling this the car collapse of 2025. They say it's not just a price correction. It's a full-blown restructuring of how value is perceived in the automotive world. And with EVs flooding the market faster than demand can keep up, the pressure is only intensifying. Electric vehicles, once the hottest trend, are now sitting idle on CarMax lots because buyers don't trust the range, the battery lifespan, or the repair costs. CarMax is sitting on a ticking time bomb of unsellable EV inventory, outdated gas models, and overpriced trade-ins that are losing value by the week. Every financial lever they pull seems to make things worse. Lowering prices hurts margins. Holding inventory destroys cash flow. And even their finance arm, once a profit engine, is struggling as defaults rise and repossessions spike. It's a perfect storm, the kind of slow-motion disaster that you can see coming, but no one can stop. And the terrifying question now is, if CarMax can't survive this collapse intact, who will? Because behind the scenes, industry insiders are quietly admitting that CarMax might just be the first domino to fall in what could become the largest auto market implosion in decades. Dealers across the country are already mirroring CarMax's struggles: record inventory, plunging sales, and vanishing profits. What started as an isolated pricing issue has now become systemic. The used car sector, once the backbone of affordable mobility in America, is teetering on the edge of a total breakdown. Behind closed doors, some executives are calling it the Great Automotive Reset. And they're not exaggerating. For years, used car prices were artificially inflated by supply shortages, stimulus money, and a flood of easy credit. Now that all of that has vanished, the market is gasping for air. The sudden correction is so severe that it's rewriting decades of pricing logic. Cars that would normally depreciate slowly are losing thousands in value overnight. SUVs that once symbolized wealth and comfort are now symbols of over-leveraged debt. CarMax, with its massive footprint and reliance on high inventory turnover, is trapped at the center of it all. Each vehicle sitting unsold represents not just lost revenue, but mounting costs, storage fees, insurance, maintenance, and interest on floor plan loans. Multiply that by tens of thousands of units across hundreds of locations, and you begin to see the scale of this nightmare. The company can't simply wait it out. Every week of stagnation costs millions, and every price cut slices deeper into already bleeding margins. What's worse, the data looks grim for the months ahead. Auction values are still sliding, wholesale markets are saturated, and consumer confidence in car buying is at one of its lowest points since the Great Recession. Even the big auto lenders, once eager to finance nearly anyone with a pulse, are now pulling back hard. Loan rejections are climbing, interest rates are punishing, and repossessions are surging. It's a deadly combination that threatens to choke off the very lifeblood of the used car business: financing. And CarMax knows it. Internally, they've begun exploring options that were once unthinkable. Some insiders say the company is considering liquidating certain lots, selling off assets, or even restructuring its business model around online-only sales to cut costs. But none of those moves solve the fundamental problem. People simply don't want to buy cars right now. Not at these interest rates. Not when they see prices dropping every week. Not when the fear of financial instability is growing louder than any dealership's marketing slogan. Meanwhile, consumers who bought during the pandemic boom are trapped in what experts call auto loan purgatory. They can't sell, can't refinance, and can't trade in without taking massive losses. Many are defaulting, leading to waves of repossessed vehicles flooding back into the market, adding even more downward pressure on prices. It's a cycle feeding on itself. The more defaults we see, the cheaper used cars get, and the cheaper they get, the more people walk away from their loans. For CarMax, this environment is a nightmare. Their data-driven model was built on predictable depreciation curves and stable demand. But nothing about this market is predictable anymore. Their AI pricing tools can't keep up with the volatility, their projections are being shredded by reality, and their once efficient operations are turning into a cash-draining maze. Each financial report looks worse than the last, and Wall Street is losing patience fast. Some analysts are now comparing CarMax's situation to the early warning signs of the housing market crash. the same patterns of inflated assets, declining confidence, and tightening credit. The parallels are chilling. Just like the mortgage bubble, the car bubble was built on unsustainable optimism. And when that optimism evaporates, all that's left is debt, losses, and denial. But here's the part that almost no one is talking about. If CarMax falls, it could pull down an entire web of related industries with it. Auto lenders, parts suppliers, shipping companies, auction houses, all of them depend on the volume and stability that CarMax provides. If that volume dries up, it could trigger job losses, bankruptcies, and ripple effects throughout local economies. What's happening on those lots right now isn't just a retail issue. It's a national economic warning sign that could signal the start of something far more dangerous than just a used car slump. Economists are already watching these trends closely, warning that the CarMax crisis could be the canary in the coal mine for a much larger financial shock. Because when you dig beneath the surface, you find that the used car market isn't isolated. It's deeply connected to credit markets, consumer spending, and even the health of U.S. banks. Here's why that's terrifying. A massive portion of CarMax's operations rely on auto-backed loans and securities, bundles of car loans sold to investors, just like mortgage-backed securities before 2008. Those financial instruments only hold value if borrowers keep paying their loans. But as defaults climb and cars lose value, those securities start to crumble. And when that happens, the investors, hedge funds, pension funds, and banks start to take losses too. It's a quiet, slow-motion chain reaction. CarMax's falling sales lead to more defaults. More defaults trigger asset write-downs. Those write-downs shake investor confidence, which dries up new capital. And as liquidity disappears, companies across the auto sector are forced to slash costs, sell assets, and fire employees. What began as a pricing correction suddenly becomes an employment and financial crisis. And it's not just theory. The numbers back it up. In just the past 6 months, auto loan delinquencies have surged to their highest levels in over a decade. Subprime borrowers, the backbone of the used car market, are getting hit the hardest. Many of them financed vehicles during the peak of the bubble, often with sky-high interest rates and long-term loans. Now, with inflation squeezing every household expense, those payments have become unbearable. The repossession trucks are rolling non-stop, and each vehicle they tow is another data point in a collapsing system. Meanwhile, CarMax's own financial arm, once a profit center that made billions through financing, is now being crushed under the weight of those defaults. It's no longer about selling cars, it's about surviving the financial fallout. Executives are reportedly holding emergency meetings, revising forecasts, and debating whether to pull back operations in certain states entirely. Some locations are already operating at a loss, kept open only to maintain a regional presence. And all of this chaos is eroding consumer trust even further. Buyers who visit CarMax lots are confused. Yesterday's $40,000 vehicle is $25,000 today, and who knows what it'll be next week. That uncertainty makes people freeze. They're not just hesitant, they're terrified of making a bad deal. That fear is spreading across the country, creating paralysis in a market that thrives on confidence and urgency. So the question now isn't whether CarMax can recover, it's whether the entire auto industry can survive what's coming next. Because if this collapse continues, it could redefine not just how we buy cars, but how we value them, and what that means for millions of Americans who depend on them every day. Thank you for watching. If you found this breakdown eye-opening, make sure to hit that like button, subscribe for more deep dives into the auto industry's biggest shifts, and let me know in the comments. Do you think CarMax can bounce back? Or is this the beginning of the end for used car giants? Until next time, stay tuned, because the road ahead for the U.S. auto market is about to get a lot bumpier.